Amrit of 5 specific climate targets at COP28. He will also be holding bilateral meetings on the sidelines of the summit. Let me now go across to Saugata Saha, President S&P Global Insights. I'm also joined by Amit Prothi, Director General at Coalition for Disaster Resilient Infrastructure. Gentlemen, thank you very much for joining us. Saugata Saha, let me begin by asking you about the controversies around the COP summit in UAE, in Dubai. There have been reports that UAE's state-owned oil agencies and also renewable companies are pushing their own bilateral agenda in meetings at COP28. How is that as a starting point?
Firstly, thanks for having me on. Good to talk to you. I'd say COP28 is shaping up to be an important one because it's the 5th COP, and as it happens at every 5th COP, there is an event of what's called stock taking. And that's when everybody takes a step back and assesses where we are in terms of what the promises made were, what the plans made were, and how far we've come along versus those plans. And this is going to be an important one because the stock take is going to show that we are pretty far apart from where we wanted to be. We at S&P Global Commodity Insights, we do a lot of independent and objective reporting. And our assessment is that we are not on a scenario or a track to be below 1.5 degrees and more on a track to be at 2.4 degrees, which is a substantial increase versus the 1.5 degrees. And the other thing I should mention is that as we look at all of the scenarios, we do believe that hydrocarbon-based fuels will continue to be a pragmatic part of the energy mix all the way up to 2050. And there isn't really a state of technology right now that gets us to a place where hydrocarbon-based energy is anywhere below 50% of the global energy mix.
That's right. And we will come to the question of India as well, because India has said that it will be adding more coal capacity. So we return to that question. But Amit Prothi, welcome to CNBC-TV18 News Center. The importance of risk assessment for disaster resilient infrastructure. How important is this objective for COP28 this time around? What is the goal that you're hoping to achieve?
Sure, Parikshit, thank you for having me this time. If you look at what's going on in the world this year, it's been the hottest year ever. So while we're having discussions on how do you reduce greenhouse gas emissions in the atmosphere so that we don't exceed certain temperature thresholds, we're already at a point where increased temperature is starting to impact our climate, is starting to impact what we see on the ground in terms of increasing precipitation patterns, changing precipitation patterns, changing cyclonic patterns, etc. Also, if you look this year, what has happened, 30%. So the disasters that we're facing around the world, a lot of them are climate related, but some of them are also related to your naturally occurring events such as earthquakes, etc. So earlier this year, we came out with a global flagship report. The report finds that the risk that we are carrying in our systems, the risk of disasters related to cyclones, earthquakes, landslides, etc. These amount to a lot of funds when you look at a lot of money when you look at the dollar value of the impact on infrastructure from a disaster. So globally, we're carrying something like $300 to $330 billion of risk because we could lose our infrastructure assets because of any of these events that I'm talking about. When you add the disruption of services to this, that number doubles, triples. So we're carrying a lot of risk already. At the same time, we're also building a lot of infrastructure. So when we're building infrastructure, I think one of the first things we need to start to think about is if you're investing $1, can we afford to lose 5 cents to that dollar, 10 cents to that dollar? So our evidence is pointing out that countries sometimes can lose up to 10% of their GDP because they have not factored in risk information in their investments. So we have, from our side, the message on understanding the risk of disasters is really important. In COP, I think we want to keep emphasizing that 30% of our disasters are not climate related, but 70% are. And in some countries, that is much bigger than a 70%. The increase is much beyond 70%, 80, 90%. Some regions of the world, the risk from climate change is incredibly high, and we need to do something about it.
Right, very important message there. But returning to you, Saugata Saha, on the issue of phasing down or phasing out fossil fuels, S&P in its reports has said this will be a prickly issue at COP28. India, for one, has said that it will not succumb to pressure from developed nations on phasing out coal because we need it for our growth needs, for our industrial needs. Do you think the language on climate financing will be key to this debate?
Parikshit, I think there's a lot to unpack in your question, and I think those are very important points. I think the first, as you said, the language between phase out and phase down is something we'll have to watch closely, and how the pronouncements that happen over the course of the next couple of weeks will play an important role in kind of determining how different countries approach it. I do want to take a step back before we kind of jump into the details of phase out versus phase down and put this in the broader context that, look, 3 years ago when the conversation used to happen, it was purely energy transition, period, right? What we've seen over the course of the last 3-4 years, notwithstanding, everything that Amit talked about is very true around the risks this, climate change poses. The conversation has really moved towards one of what we call the energy trilemma, which is you want to solve for 3 things simultaneously. You want energy security, you want energy sustainability, and you want energy affordability. And all 3 of them are extremely important, especially for a developed country or a developing country. And as we've said in one of our other research reports, the path to global energy transition goes through India. In fact, it goes through India, China, and many of these large countries. And how these countries come around on a pragmatic way to manage emissions is going to be important. Keep in mind, and I think your viewers should also keep in mind, that the enemy is not energy. The enemy is emissions. So what we want to do is get to a path where we can phase out or phase down over time emissions and energy sources which have associated with it high sources of emissions. And we are optimistic that over time, as a combination of technological innovation and public preference for some of these changes, will get to a better path. But I should also pragmatically just say that right now, globally, our models don't say we are on a path to get to 1.5 degrees global warming by 2100.
All right, so we are not on that path right now. Amit, Prothi, coming back to you, when it comes to taking the private sector along to commit to financing for disaster-resilient infrastructure, do you think that COP28 needs to integrate that in any sort of model for planning for the future?
So I think Parikshit, your question is a big one again. And the simple answer is absolutely. But how do we get there is not an easy answer at all. Private sector is investing in infrastructure clearly. And enough evidence is starting to point towards, if you're investing in resilience, if you're paying attention to long-term losses that your infrastructure might suffer, there may be more economic opportunities if you start to incorporate future losses into your calculations right now, and understanding that, if you're building a solar farm and that solar farm gets flooded in the future and you can address it now, you're not disrupting services that your financial models are predicting that you will have for the future. So, starting to think about how climate risks, other risks, are going to affect your bottom line, not only now, but in the long term, is important. I think this is the discussion that has to happen. The metrics to measure potential future losses, measure something that's called multiple benefits. Resilience dividend is a term that's being used now more and more, where understanding that what you invest in today is going to last for a long time. How do you make sure that you're not losing value over time because you've not paid attention to risks? How do you make sure that your investments today can maximize benefits in the long terms? These are some of the discussions going on under sort of what we call resilience dividend. We're not there yet. It's not easy. I think part of it is trying to build in that metrics into your cost benefit analysis today is incredibly important. And I'm hoping that in this COP, that discussion continues so that, by the next couple of years, we actually have clarity in how investments today can be the benefits can maximize over time. And just one final point there, there is enough evidence. The World Bank has come up with a report that if you invest $1 today in resilient infrastructure, you actually gain much, up to $3, $4, $5, $6 by investing in resilience today and not waiting for a disaster to reduce your disruptions over time.
Right. Saugata Saha, if I were to ask you, keeping in mind the current geopolitical challenges, what can we realistically expect in terms of achieving at COP28?
I think there's a few things I'd be optimistic about. I'm not going to try and prognosticate what might be specific outcomes. That's probably a very hazardous endeavor at this point. But I'd say a few things. One is, I think, a stock take, which will reiterate the message that we are on a very different trajectory versus where we wanted to be at this point. And I think that should be sobering wake-up call for everyone that we need to continue to accelerate down the path we are on. Second, I would say is that we would expect to see increased divergence of discussions between the so-called global north and the global south, and that should highlight some of the challenges which the global south faces as we think about the global energy transition. And then the third is, I think the conversations will raise a lot of focus on the funding gaps that exist today. And I'm not even talking about the resilience-related funding gaps, but just the pure funding that is required to create the new infrastructure and these new sources of energy, which, depending on which research report you look at, is somewhere between $500 billion to $1 trillion a year short. And having some of these on the table and having acknowledgement around all of these would definitely be very helpful. And I would also say there are some other things I'm quite optimistic about. For example, a global call to action on methane.
Okay.
Methane emissions would go a long way, and that seems like something the industry is pretty close to being fully behind. So I'm pretty optimistic that there'll be tangible things that the world will work on over the next few years coming out of this.
All right, we've run out of time, but thank you very much to Amit, Prothi and Saugata Saha for joining us, really setting up the challenges at COP28 for us. Some very important points there on the broadcast, really giving a sense to our viewers on what to expect over the next 2 weeks or so in Dubai. That's all we have time for on News Center. Thank you for watching. Goodbye.